2018, a chip engineer stands in front of his company and makes a promise. Until this company turns a profit, he will take no salary. The company went on to earn no profit for 7 straight years. Then this July, it went public, raised $8.6 billion, and jumped 466% in a single day. Instantly, one of the most valuable companies in China. AI chip stocks around the world fell out of bed. Korea's stock market crashed so hard, the exchange had to halt trading. Twice. This is the story of Zhu Yiming, the man who worked for free to break the most comfortable cartel in technology. So, how does an engineer with no paycheck beat the giants with all of them? Let's rewind, starting with a chip you've never thought about inside everything you own. There's a chip called DRAM. It's your device's short-term memory, the thing that lets your phone hold 40 open tabs while you ignore all of them. Every phone, every laptop, every console, every AI data center runs on it. And for decades, 3 companies made about 95% of it. Samsung and SK Hynix in Korea, Micron in America. Technically, 3 companies sharing a market is an oligopoly, not a monopoly. Feel free to explain the difference to your wallet. Think of DRAM as a toll road. 3 companies own the gates, and every phone you've ever bought paid the toll. In 2017, when supply got tight, memory prices nearly doubled. Your phone quietly got more expensive, and there was nowhere else to drive. Then a 4th company pulled up and started building its own gate. No factory, no customers, and a founder who just volunteered to work for free. The 3 gate owners did what incumbents always do. They laughed. That laugh is going to cost them. Zhu Yiming was born in 1972 in Funing County, Jiangsu, a rural county where his mother worked in a factory and his father was a small-town official. Nobody in the family had ever been near a semiconductor. The boy just liked taking things apart. The alarm clock came apart and never went back together. He took a beating for it. The radio came apart and smoked. Another beating. The next day, he was taking something else apart. In 1989, at 17, he tested into Tsinghua University's physics department, a ticket almost nobody from his county ever got. He rode the slow train to Beijing, bedroll on his back, more than 10 hours. And while his classmates tutored for pocket change, Zhu wrote code for tech companies in Zhongguancun. By the late 90s, he was earning 300,000 yuan a year. The average income in China at the time, 10,000. He could have coasted on that forever. Instead, he left for America, a master's in New York, then Silicon Valley, designing memory chips. And there he noticed something in the history books that everyone else filed under trivia. The memory business has a center of gravity, and it moves. The first commercial DRAM chip was American 1970. By the mid-80s, Japan had taken the crown so brutally that Intel, the company that started it all, walked away from memory entirely. By the 90s, Korea had taken the crown from Japan. America, Japan, Korea. Zhu looked at that map and made a prediction that sounded less like analysis and more like a dare. The next stop is China. So, you want to build memory chips in China? Yes. Samsung's research budget is bigger than your entire company. Correct. Korea has a 30-year head start. Also correct. And your strategy is? Patience. That's a personality trait. He started in 2004, the way American legends start. $100,000 from a venture capitalist, a cheap garage, a Tsinghua classmate, and a chip prototype built by hand. That became Gigadevice. He raised $920,000 more from Tsinghua alumni, moved the company home to Beijing, and built it into a real flash memory business. But flash was never the crown. In 2016, he launched CXMT in Hefei to go after DRAM itself. And in 2018, with the company burning money and the doubters multiplying, came the pledge, Reportedly, not 1 yuan of salary until CXMT turned a profit. In an industry where executives collect bonuses for missing their own targets, this was received as either inspiring or insane. The consensus leaned insane. Here's the part that should bother you. Everyone laughing at Zhu had read the same history he had. They'd simply decided the pattern would politely stop moving before it reached China. The pattern had other plans, but first, it was going to make him suffer. Here's the brutal math of memory chips, and it's the reason 3 companies held the market for so long. DRAM is a commodity. Nobody has ever walked into a phone store and asked what brand the memory is. You win on exactly one thing: cost. If your chip costs 1 cent more to make than Samsung's, you lose money on every chip you sell forever at a scale of billions of chips a year. The entire game is making an absurdly difficult product slightly cheaper than 3 companies who've been practicing for 40 years. And it is absurdly difficult. A DRAM factory costs north of $10 billion before it produces anything. The chips are built in layers measured in atoms. The number that decides whether you live or die is yield, the percentage of chips that come off the line working. Samsung's yields were 40 years of accumulated scar tissue. A newcomer starts so low that every wafer coming out of the fab is a small bonfire of cash. So for years, that's what CXMT was. A company selling almost nothing, burning money by the billion, run by a man earning none at all. Then it got worse. Washington began restricting China's access to advanced chip-making equipment. We'd like to place an order. Your newest systems. That will require an export license. How long does the license take? For you? Indefinitely? Is that a no? It's a policy. Most companies staring at that math would quit. CXMT had a founder who literally could not afford to. He'd signed himself into a deal where quitting was the one outcome that paid nothing. 2025. CXMT turns profitable 9 years after founding, 7 years after the pledge. Somewhere in Hefei, Zhu Yiming became eligible for a paycheck at his own company, reportedly his first since 2018. Imagine the payroll department setting that account up from scratch. And the moment a memory company turns profitable, something dangerous happens. It stops being a science project and becomes a competitor. CXMT's chips were now good enough, cheap enough, and plentiful enough that the toll road had a problem it hadn't faced in decades: a fourth gate. Undercutting the toll. July 27, 2026. Shanghai, $8.6 billion raised, the biggest share sale in Asia all year. The stock climbs 466% in a single session and closes at a market value of 3.3 trillion yuan, roughly 480 billion US dollars, parking CXMT among the most valuable companies in China. A company that 8 years ago was a construction site and a salary pledge. Then came the aftershock. Memory stocks had spent 2 years riding the AI boom, priced for a party without end. And to a trader, a fourth gate on the toll road means one thing: cheaper tolls. The selling started before CXMT even listed. July 16th, the day the IPO size became public. SK Hynix and SanDisk down 7%, Micron down 5%. Listing day, SanDisk down 12%, SK Hynix down another 8%. The morning after, SK Hynix dropped almost 15% in a single session. And Korea's exchange hit its circuit breakers 2 days running, the first back-to-back trading halts in its history. By the end of July, the damage was historic. The Kospi, Korea's main index, lost 22% in a month, its worst since the 2008 crisis. SanDisk, down 45% in a month. Micron, down roughly 30%. SK Hynix, down 35%, and nearly 60% below its June peak. Across the world, chip stocks shed more than $1 trillion. Now, in fairness, Korea's market was already primed to fall. Record retail leverage, and AI trade priced for perfection. CXMT set it off. Seoul did finally bounce on the last day of July, and the bounce was the biggest single-day gain in the market's history. The champagne in Hefei was somebody else's margin call. And sit with what that sell-off admitted. The most confident trade on earth got shaken by one newcomer turning its first profit. Markets that sturdy don't panic. This one did. Samsung and SK Hynix still lead the market. They're still ahead on the most advanced chips. But a monopoly's power comes from having no one behind you. And now, permanently, someone is. Here's the detail the headlines keep skipping. Every article says the same things. Blockbuster IPO, Samsung's challenger, China's chip champion. Almost none of them mention that the man who built it spent those years working for nothing on a prediction he made back when Silicon Valley was still sure China could only assemble other people's ideas. So, rewind the tape. A kid from a farming county who took beatings for dismantling the radio. A slow train to Tsinghua? A garage in Silicon Valley. 7 years of no salary? 9 years of no profit. Then $8.6 billion in a day. The pledge reads as pure conviction. It also reads as the cheapest marketing campaign in corporate history. The whole world now tells this exact story about him. Then again, he's reportedly pledged tens of billions of yuan of his own stock to his employees. The cynics are having a harder time with that one. One last thought. Nobody spends 7 unpaid years breaking a toll road to make the road free. They do it to own a gate. So the next time memory prices spike and your phone gets mysteriously more expensive, remember, there used to be 3 companies making that decision. Now there are 4, and somewhere out there, an engineer nobody is taking seriously is already reading the map for stop number 5. The last company that forced its way into this market was SK Hynix. The giants tried to bury them too. That story's on your screen right now. The chip war has more chapters. Subscribe so the next one finds you.